Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and on this edition, I'm going to be sharing with you the entire opening action as to what we have seen the markets opening this week. The Sensex and the Nifty have opened on a negative note following a disastrous week. We have seen the benchmark slipping away 3% in this entire previous week, where the bears took control of the D Street. Today, again, on the back of the weak global cues, be it the US markets or the Asian markets, the Indian markets have slipped in early trading session. We have seen the Sensex giving away about 200 to 300 odd points, and the Nifty trading below 17,600 mark in the initial trading action. Now, when we see the opening levels, 181 points were gone right there for the Sensex, it was down about 0.3%, and it was trading at 58,855. The Nifty was also down 61 odd points and was trading at 17,555. There has been some kind of a recovery from those opening lows that we have seen. About 1126 shares have advanced in the early trading session today, whereas 1175 shares have declined and 131 shares are trading with unchanged price action. Now, when we talk about some specific sectors, how are they moving? It's again the IT, the biggest laggard of the last week, that continues to trend on the downward trajectory. Over 1% cut seen over there. The metals also losing some sheen, over a percent cut right there too. Barring the private banks and the PSU banks, rest all of the sectoral indices are trading in the red. Some gains coming in from the private and PSU banks, where perhaps on the back of the earnings that are being reported in this entire space, the asset quality was really coming behind in the kind of earnings that we are seeing. In specifically, when we talk about the stocks now, JSW Steel, Asian Paints, Hindalco, SPI Life Insurance, and HCL Technologies were among the major losers on the Nifty right in early trading action today. Whereas when we talk about ONGC, Maruti, HUL, Power Grid, at SPI, these were the top gainers as far as the Nifty index is concerned. Of course, the two big earnings that were reported over the weekend and after the market hours on Friday were Reliance Industries and ICICI Bank. The earnings on both these companies have been beating all these street estimates. We have seen a positive result from both these big wigs of the industry. Let's talk about Reliance Industries results first. The company reported a sharply higher consolidated profit at 20,539 crore rupees in Q3 as against 14,894 crore rupees in Q3 of FY21. Very, very sharp jump on the profit level. The revenues too have grown over 2.09 lakh crore rupees from 1.37 lakh crore rupees on a year-on-year basis. Remember, all the cylinders and all the verticals of Reliance Industries have also seen a very, very strong reportage, be it geo or be it the oil and gas segment, be it the exploration and production segment. All of them have seen positive or retail segment as well. All of them have actually reported positive earnings this time around as well. ICICI Bank, on the other hand, the bank has reported over 25% net growth in profit for the December quarter. That was helped by the lower provisioning and the higher net interest income. The net interest income was up by 23.4% to 12,236 odd crore rupees from 9,912 odd crore rupees last year. The other income has grown by over 6.4% this time around. The asset quality has really improved over the last many quarters. We have not seen this kind of an improvement on the gross net assets and the net assets as well. So there has been a positive development right there as well. Both these stocks, Reliance Industries and ICICI Bank, are up by about 0.5% in the early trading action on the back of the earnings. Overall sentiment on the street, however, is still low. Now, when we talk about ONGC Videsh, which is a subsidiary, has entered a development stage with the declaration of commerciality or DOC in its Brazil offshore project BM Seal 4. Now, Vodafone Idea is another stock that you need to keep in your minds, and the company has posted a loss of 7,230 odd crore rupees in Q3 as against a loss of 7,132 odd crore rupees in Q2 of FY22. So on a sequential basis, there has been some more declining coming in on the losses that the company has been reporting. The revenue, however, has risen on a sequential basis from 9,400 crore rupees to 9,700 crore rupees. Some breathing space coming in for Vodafone right there. Now, apart from that, we do believe that the earnings will continue to be important to track throughout this trading week as well, which is going to be again a truncated week. The earnings will remain in focus. So we do have Axis Bank, Larsen and Tubro, Marico, Cipla, Federal Bank, Maruti Suzuki India, Dr. Reddy's, Kotak Mahindra Bank, Punjab National Bank, and also Bharat Heavy Electricals as the main companies that will be coming out with their earnings this week as well. Now, remember that the markets, most of the experts do believe that there could be some more volatility in this entire week after the sluggish week or the lackluster week that we have seen in the previous one as well. And that's on the back of there will be a truncated week of action. The markets will remain closed for on January 26th on the account of Republic Day. And apart from that, we will be inching closer to the series expiry, which will fall on Thursday as well. And right ahead of the expiry, there could be some more volatility. So one should brace up for that as well. We are going to see some more action on the IPO space. Adani Wilmar is going to be launching its IPO on January 27th, which will close on January 31st. Adani Wilmar, as all of you know, is an equal joint venture between Adani Enterprises and Wilmar International, and the owner of the future Fortune brand of edible oils as well. Apart from that, a whole host of other triggers will be important to track how the global markets are trading. Remember, it's the slackening trade in the global markets, especially the US markets that have been on a downward trend, is something that has been weighing on the sentiments all across the globe on equities as well. And the kind of earnings that are coming about right there, that's something going to be forming a trend for the overall global equity markets as well. So that's important factor to track. Apart from this, all the inflationary trends, the COVID-19 new Omicron cases, how is the development on that front? Apart from that, the FII sell-off, that is a big dampener for the Indian markets. We have seen FIIs selling over $2 billion in Indian equities in this entire month of January so far. On Friday itself, we have seen 3,000 odd crore rupees of sell-off by the FIIs as well. They have been net sellers pulling away lots of money from the Indian equity markets, not really supporting to the rally that we had seen in the last 2 years. Right after the March 2020 crash, the FIIs had been pouring in a whole lot of money, supporting the overall rally. But how long will this sell-off continue is going to be an important factor to track as well. So these are some of the factors that will keep the markets on its toes right ahead of the big bank event that comes in next week. As far as 1st February, the union budget is going to be important to track. Of course, there'll be some cues coming in, some early trends coming in, and some pickup stories which we will keep you updated with as to what to really expect from the union budget. And if budget is on your mind, then you should just stay with Business Today. We'll get you all the stories, 360-degree coverage on union budget as well. And with that, I wrap up on this edition. But do stay tuned, like this video if you like it, and also subscribe to our YouTube channel and stick with us via all our social media handles as well. Many thanks for tuning in.